What's up, everybody? Happy Monday and welcome to Ninjacators' new weekly live event called Profits at Noon. My name is Nate, co-hosting these sessions with our very own Richard Krugel. We have opened the room up just a minute early to give everyone a chance to trickle in, get settled, and get ready for today's session. Hal, Mohammed,
How's it going?
Paul, welcome all.
Hello, everyone.
Quick shout out if you're joining us over on the simulcast on YouTube. Welcome today. We're going to get started in just a minute here, folks. It is noon Eastern on the hour. Quick note, whether you're joining us here in Zoom or over on YouTube, if you have any questions throughout today's analysis, please feel free to fire away in the chat, and we will be more than happy to address that, ensure it's taken care of before we get out of here today. If you are new to these sessions, just some quick background. This is our weekly live event called Profits at Noon. We are live 3 days a week, Mondays, Wednesdays, and Thursdays, all at noon Eastern time. The goal here is for us to show you the levels that we are stalking for entry and to steer you clear of any market traps, news bombs, or surprises that could be waiting around the corner. So in addition to all this great live analysis you're going to see here today, it is our goal to give you actionable levels that you can copy and stalk along with us. Of course, we do encourage you to join the follow-up sessions so you can see this analysis in action, see how it all plays out in real time. So as mentioned, we will be live again on Wednesday for a follow-up session. We would love to have you, encourage you to join there. So I see we are 1 minute after the hour. So let's go ahead and start firing things up. I hope everybody is well. I hope everyone's had a nice weekend. We're going to catch you up for the week, let you know what to look forward to here. And then, of course, one more quick shout out to our crew over on YouTube. If you want to join us in Zoom, check the description. There is a link where you can register to get reminders and join us here in the VIP section. But all that said, we are firing up today's Profits at Noon, so let's go ahead, bring in our very own King Richard, as I like to call him, Richard Krugel. Won't you step in, take the reins, and lead today's analysis for us, sir?
Thank you very much, Nate, and welcome, everyone. Like Nate said, I hope you all had a fantastic weekend. As always, we'll be diving into the markets, the usual stuff we look at, the ES, the NASDAQ, Russell, gold, and crude oil. There's been quite a few developments that's happened. We're obviously going to look at that on the analysis side of things. But before we do so, I'm just quickly going to disappear off screen here for a little bit. I'll be back a little bit later. And just to make a quick note that all information in today's session is provided for educational purposes only, and it's not an offer or recommendation to trade futures, stocks, options, or Forex. Okie dokes. I've been skipping this sometimes. I should not actually do that. Look a little bit at the economic calendar for this week. Relatively quiet. We've already had the ISM Services PMI figures come out. I think the only next notable one will be on, this is Thursday, when we have the unemployment claims coming out at 8:30 a.m. EST, and then nothing really noteworthy on Friday from out of the US, that is. It's a bit of overnight news for you guys. Probably woke up, if you do follow crude oil, for example, the Saudis have decided to cut production. I think they've done this a while back. Talked about it. Things went straight up. That's that massive gap we had to the upside. Now we're going to look at crude oil obviously in just a while, but a similar thing happened this time around. Crude oil making new sort of, not highs for the year, but above those previous highs that we've been looking at prior to this correction we've had for a couple of weeks. But yeah, that's probably the most noteworthy thing. Apart from the ES, NASDAQ, YM, they've all still been going upwards, sort of in line with expectations. Just to bring everyone up to speed here with what I'm still seeing on the ES, we've been looking at the ES sort of around mid-March, not in the massive overall bigger picture, but the sequence from March, mid-March, that we've potentially seen a one wave, one high, second wave, and this being a leading diagonal, potential third wave, and then we had this expanding triangle that we sort of correctly identified, sort of almost spot on prior to this move back to the upside. And then I was saying that we potentially heading higher in a fifth sequence. Again, this is not in the bigger picture of things. I'm just looking at the sequence here from mid-March. So still thinking that this is potentially a fifth wave heading higher. We drew in this channel to the upside to see from a market geometry perspective where we might find support and resistance on the way back to the upside. I also noted that I did not see this as a fifth wave high. Reason being is that this really does look like some sort of a three-wave move. One would expect a five-wave move into a new high, whether that be a third wave or a fifth wave or a first wave or whatever pattern price, I wouldn't say uses, but traces out to give these motive waves. Then we had this sharp decline and now another three-wave move back to the upside. So the idea here is, for me at the very least, that this fifth wave is tracing out as potentially an ending diagonal, something like this. All right. So in my opinion, not done just yet. So still bullish on the ES. And if you look at diagonal patterns, whether they're ending or leading or whatever, they typically trace out in three waves. So they subdivide, there are 5 waves in total, but they subdivide in 3 waves. Also quite interesting here, this channel that I drew last week, going from this low where I assumed the fourth wave ended to this low prior to this recent strong move back up again, and to this high around about mid-May. Price obviously broke out of those boundaries to the upside, but quite often we've seen this on gold, if you guys have been with me for quite some time, that the markets tend to respect these angles quite well. So if we were to, let's say, draw a line, or ray in this case, parallel to one of these channel lines, you project it to the upside, it's kind of where price is now struggling to get through. We can do the same projected to these highs over here. That might be a next target to the upside. Now, something else also very interesting here, which makes me still think that the, how can we say, this angle of ascent to the upside is still in play. So if I copy and paste the same channel and I superimpose it to the upside there, look where this high found resistance. Well, obviously, you can't say it found resistance because I'm doing this, after the fact. But with this sort of line of work with market geometry, trying to, what I'm saying, try and find the operating angle of this market, if that makes sense. Now, just copying and pasting and putting that to the upside, tells me that should price head higher, these would potentially be areas that could act as resistance. One other thing I've noticed, if this is some sort of an ending diagonal, where these 3 waves subdividing, making 5 waves in total, reason still thinking that I don't think this is done yet, is that even these little internal waves, or these 3-wave moves to the upside, a beautiful symmetry in range. So that's from high to low, 100% correction to the downside. Not to say this is going to happen again, but if you take this low to that high to last week's low, price is right at that 100% again. So one other thing is, like, if I'm completely wrong about this, is that we're just starting to get into one hell of a super trend to the upside. That's also a possibility, which would then, in my opinion, mean that this was potentially a wave 1, a 2, and that this is still building much higher for a wave 3. So, yeah, long story short, bullish, obviously, on the ES, but also expecting that at any time. That's obviously been the way these markets have been moving for quite some time, even last year, is that you have these sharp moves to the upside, followed by very sharp reversals out of the blue, sort of unexpected, but quite often they do reach these market geometry levels, which is obviously why I'm using this analysis as well. So still working under the idea that we could potentially see a reversal to the downside, but that would probably won't be a bearish move. I'll just be treating it as corrective in nature. That being said, very strong close last week. Price today, Sunday's open in the US, been above today's pivot point, 4,271. And price is steadily building its way to R1. It's at 4,314. And we also today's projected range high there at 4,332.5. Now, whether the price will reach that today or not, I've shown these fib extensions as well. We'll just have to wait and see. We'll obviously recap things again on Wednesday. So again, long story short, the same thing on ES and NASDAQ, YM and Russell, bullish on all of them, but just in my mind, a bit careful that we could see potential reversals again soon. Okay, that brings me to the NQ. Obviously, the leader of the indices here in strength. We've had this pitchfork slope to the upside. I changed that setting, also, should I say, the anchor points a couple of weeks back. And this is still now my operating angle for the NQ. Obviously, still bullish, but also just being careful that should price reach this upper red warning line, which is this line running to the upside here, that could potentially act as resistance in my mind. Quite often, that's what we call them, the warning lines. When price reaches them in extreme moves, they quite often catch the extremities of moves before you get a deeper correction. Now, price has not reached that just yet. It almost found support here yesterday, last week at this upper median line. It's already broke above today's R1, which is around 14,653. And then we got a bit of confluence between today's R2, or very close to, let me show, I say at 14,720, and today's projected range high at 14,726, which might be a target area for, let me just get rid of that snap mode, or an area the NASDAQ might still want to move towards, whether that happens today, this week, whatever the case might be. This could act as an area of resistance. Now, if we fall short of this upper red warning line, like we did here towards the end of May, we might get another move lower, but at some stage, price does hit that. We'll have to continuously upgrade or move our target high for potential resistance. Also see where our levels to lock would be at those dates, because obviously the angle is sloping upwards. So as time passes by, that angle would go higher and higher, right? So higher in price for potential area of resistance. Again, also bullish on the NQ. You can even see here when price broke above this, what we call a 50% dashed median line, pulled back straight towards it, found support. And like I said, might be heading towards that upper red warning line. Doesn't have to do it, but you'll see this quite often, that quite often acts as strong resistance in a very bullish market. All right. Brings us to YM. Lift off on the YM. And on the YM sorry about all that, I've been mentioning that we've potentially seen the end of a double zigzag that pulled right into a 61.8 FIP retracement level. And that level was determined by taking these lows sort of mid-March to this high that formed around the end of April. Beautiful retracement. We had a 50% little bit support and just hit that 61.8, and that after a 1, 2, 3, 4, 5, 6, 7 wave sequence. And if you think you're dealing with a correction, which I've been thinking we've been doing for a while, then the pattern that still fits in my head of what could have been happening here is a very short ABC, an X wave, and then sort of a bit of a long-winded ABC as your secondary ABC. So two ABCs after each other, and you would then label this entire thing a WXY pattern. I should actually just, oh dear, what did I do now? Pressing buttons, I shouldn't. W. Come on. And sometimes it's got to do with this indicators I have in my chart. I've got so many of them here. WX, I'm going to work with that. I think that's potentially what have happened here. And that's a tracement to the downside, in my opinion. Let's just put the Y down here somewhere. I don't know what's happening, guys. I do apologize. All over the show, yeah. Anyway, I think you get what I'm saying. A WXY. And this potentially could now be the next bullish wave building up towards new highs. I would say breaking these highs potentially. Right, so quite a bit of a lift off here on the YM as well. Price being today above today's pivot point at 33,600. It's not yet reached today's projected range high. That could potentially still be an area it's moving towards. And you see all the labels are sitting on my left-hand side here now. It's at 34,161. That's at projected range high. Again, this is our proprietary indicator here, Ninjacators. It's basically using previous days or the previous trading days volatility to determine these areas where price might gravitate towards or find support and resistance. And we also have R1 a little bit higher up at 34,081. So could potentially be targets for today. But again, if this is the next move higher, you could potentially see a larger wave than this first wave to the upside and potentially start seeing a build up towards the upside like that. All right, so also bullish on the YM and any sort of retracements. This line I drew in here was actually a lower red warning line that I've had on my chart last week. So I'm not going to redraw that back in again. A price broke below it. This is what we call a retest of that line. Basically a kiss goodbye sort of thing. It did make a new low, pulled back above it. So if it does pull lower, it might act as support this time around. All right. It brings me to the Russell. I want to get away from that chart because I screwed up the scales there. Finally, a breakout of this range that the YM's been in since 24th of March. That's sort of your upper limit over there. I don't know why it's not colored. Let me just quickly change that as well. Obviously, I've been doing some other work here, and that's why. And your upper limit and the lower limit that we've been looking at for quite some time. I even thought that maybe this was some sort of an ugly triangle formation, but now price is broken above it. But I thought potentially it's going to stay above it, but look, pulled back straight back into it again. Again, I'm not a big fan of trading the Russell at the moment. Maybe intraday, it's probably a good market to trade if you want to be selling near highs or buying near lows or whatever your strategy might entail. But in any case, it pulled back straight into this area. For me, it really need to start staying above this upper range for me to start thinking that price is going to head back up. The other thinking here on the Russell is that this is some sort of an ugly double zigzag in itself. And then see a decline again. Obviously, a different indice from the NQ and the ES and the YM. But yeah, it is what it is. Very messy. As soon as you think it's starting to catch direction, you see very sharp reversals against you again. So we've seen price just test on a previous 4-hour candle today's pivot point at 1,814. Broke below there. Just booked today's projected range low at 1,801. And it's trying to make its way back up again. I think if it breaks above the previous 4-hour candle around 1834, then it'll probably head towards today's projected range high at 1850 and today's R1 at 1856. All right, that's the Russell. And this brings me to gold. Again, here's that similar thing I've done with a channel on gold. We did change the August contract last week, so I had to redo some of my geometry. But in any case, for those who are new to this, all of these markings here were actual patterns we were tracing and looking at and sort of adapting to changes in price action, etc., during that time frame. We had another move to the upside. We had a move lower, and then I marked this as a fifth wave high. So sort of similar thing, obviously different price structure and different market that I've been tracking than I'm saying in the ES, if that makes sense. So in the ES, obviously different price structure, but looking at that fifth wave on the ES, what happened here on gold, it reached that upper channel line again. We had a decline and finally a break below that channel. And that sort of confirmed that we're going to potentially see a deeper retracement to the downside. Just want to quickly get rid of these fib levels, yeah. So I'm thinking here still that we've potentially seen a 5-wave decline. Although price came very close today to breaking these previous lows. But after a 5-wave decline, we could expect a potential deeper retracement. Now, after a 5-wave decline, I'm reading this as potentially an A, maybe a B, something like this. And then another 5-wave decline at a later stage. So we did find support here. Price just missed today's S1 at 1951. just reached today's pivot point at 1976. Slightly above there, we have today's projected range high at 1980. So this could potentially have been an A, very sharp B, and maybe another wave higher to give us this larger retracement and then another decline. Unless price obviously finds resistance here and move lower. Even then, if that happens, then maybe I've just been labeling my 5-wave decline incorrectly. Maybe this was then a 1, a 2, this was a 3, 4th wave still underway, then 5th wave, and then get a larger move back to the upside. So, yeah, I think if the ES is going to, and the NQ is going to find a little resistance, maybe start heading lower in a correction, that we could potentially see that bounce in gold sort of like sinking around the same time. So I just quickly, something else I did here from a fib extension relationship. If you go from that high to this low, assuming this is wave 1, and that was wave 2, then look at that. Gold came within literally, geez, what is that? A tick or two from this 161.8 fib extension, which could mean that this potentially was just a 1, a 2, and then your third wave has to be 5 waves. That makes sense. This corrective, another move lower, then a correction to the upside. So either way, it's all about really watching what price is going to do. It's quite a strong bounce here. If this continues higher, then I'm going to be reading this as the start of that deeper correction to the upside, but still being bearish over the long run, if that makes sense. All right, so you're sort of, on the sidelines here, what's happening with gold coming so close to these previous lows, but we've seen it so many times these days in these trading environments and volatility. We think price is going to break a new area or low, and then just find support and you get a strong reversal. Point made on the crude oil chart, for example. Last week, we were looking at this decline over here. We were saying that this was potentially all corrective in nature, and the price was going to then make its way to new lows. Now, that didn't happen. Also came very close to this previous low and started moving back up, and then the Saudis decided to cut production. We've had quite a strong open, but a reversal immediately down to the downside again. So yeah, flipping these highs and immediate reversal back to the downside again. So if this still is corrective, which I'm still thinking it is, even though they're going to cut production or whatever, I might obviously be wrong, I'm still treating this, and obviously it's now changed its shape, as corrective. Maybe also a double zigzag that's incomplete. Maybe price still heading towards this upper channel, which is a new channel that I've drawn on my chart. And I've also drawn in a standard pitchfork here. So this pitchfork's not 100% the setting I want to use just yet, but I'm going to be playing around with it as price makes its way upwards, see if price can find support and resistance at some of these angles. All right, so I might as well just take that off for right now. I'm going to leave that channel on there for the time being. We've seen a close or open above these previous highs, move right back to the center channel line, and that's potentially going to act as resistance. We had this little bit of a gap. We got a gap fill on this current candle. If price finds support here, and I think we make it above today's range around 73.84, that we could see that next move higher, potentially as high as the 78 handle. So yeah, obviously being above today's pivot point, broke above R1, found a bit of resistance at R2 at 73.52. So watch price either today, tomorrow. If it breaks above, either today or tomorrow above this range, you potentially see a move higher towards new highs. I wouldn't say new highs for the year. Obviously, crude oil's been very weak, but towards this upper channel line. And again, on Wednesday, we'll update our price targets and see if any of our projections or levels to lock, as we call them, line up with that sort of upper level. So again, also now on crude oil, unfortunately, I won't say unfortunately, but I have to change my bias from although it's still bearish in the long run, bullish over the short run, if that makes sense. So yeah, bullish until price hits this upper median line, unless we see a very strong reversal from here. Then obviously I'll just fall back to my bearish bias over the long run. But I'm still treating this as corrective in nature, regardless of what the Saudis say or what they're actually going to do. That pretty much concludes the analysis, guys. Not too much to update you guys on, other than crude oil making its move. The ES still sort of following that projected path to the upside. So yeah, that's all I really have to say on my side. So if you guys got any questions, please do not hesitate to ask. I don't know, I can't see the YouTube simulcast on that side. Maybe there's questions that side, Nathan.
Sure. Well, thank you so much, as always, Richard, for the in-depth analysis, the insights, and a peek inside your brain. Currently, For a Reason is back with us on YouTube, as well as a few others. We don't have any questions coming through just yet, so we'll extend this opportunity to everyone, whether you're here in Zoom, joining the simulcast over on YouTube. If you have any questions for Richard about today's levels to lock, about the analysis, please feel free to fire away in the chat. We'll be happy to discuss it with you. I see Jackie is back in the house, by the way. Jackie, I hope you've been well. It's great to see you.
Yeah, I see there's a lot of new names here, so guys, don't feel shy to ask. I think Hal always says thank you, because I'm not sure if Hal's been used to the market geometry techniques before, but I think at first when you see all these lines on the chart, it might become confusing, but I do urge you to stick around. Market geometry works really well when you apply them to the markets, especially to give you targets, areas of support and resistance. And the more often you see it, the more sense it would make in the end. Geez, Jackie, that you break your ankle. That's not nice to hear. Hopefully you're recovering.
Yeah, very sorry to hear that, Jackie. Sure. Well, I'll say this, since we do have some new faces here too. I'll just quickly note.
A lot of new faces.
I know earlier in the session I did mention, just a brief kind of description about these events, but I'll also throw this out there. Nicholas, you're new here, so welcome, Nicholas. It's great to have you. So I'll just really quickly recap. On the most basic level, we're live 3 days a week. Mondays, Wednesdays, and Thursdays, all at noon Eastern time. We'll go through our 6 favorite futures markets, as Richard did here today. We'll provide what we call levels to lock. And then, of course, we're going through these same markets, providing updates at all of these follow-up sessions. So in addition to the core function of these events, what we also like to do after the analysis is a couple times a week or throughout the month, we'll make room for special guests to put live events on your radar from the Ninjacators calendar, and also what we call tool spotlights. So tool spotlights are huge. It seems to be one of the things that everyone enjoys the most. We always have a very interactive, engaged crowd when we do these tool spotlights. So what we do, for instance, Richard will grab something from our Pro series, one of our higher end tool bundles, and he'll break that out for you in this session. He'll show you how to use it. He'll show you all the features. He'll apply it to a few charts. He'll take questions. So if any of you here that are new, if there's any of those Ninjacators tools or tool suites that you're interested in, curious about, or if you're already an owner and you're just looking for ways to further optimize or new tips, we're more than happy to take those requests. So please feel free to fire away. We're going to make room here just a couple minutes before we go today, so that if anyone has requests for tool spotlights or anything they'd like to see in future sessions, just fire away in the chat. We'll be happy to.
Or maybe if there's sorry, Nathan, for interrupting him. Maybe if there's any other market you would like me to do analysis on. Unfortunately, I don't have anything or data on stocks at the moment. So mostly on the future side of things. Anything outside of the markets I'm analyzing at the moment, if you want me to have a look at that, then let me know. Then I'll cover that in the next session for you. Be more than happy to.
Sure thing. And it looks like we do have a question coming from For a Reason over here on YouTube. Let's go ahead and fix my camera very quickly. There we go. So For a Reason, I'm going to fire this away at you, Richard. To everyone else, please feel free to fire away in the chat there while we're taking care of this. But For a Reason says, when I draw the trend lines either up or down, and I have confirmation from that trend line that the trend will end and the price reaches an area of weak support or weak resistance, and I also have clear confirmation to enter the trade, but it doesn't work or what's missing. Let's see if we can tighten that up a little bit. So it
For
sounds.
reason,
Oh, go ahead.
what the thing is here, I'm also looking at sort of price structure as well. So number one, apart from the market geometry, you wanna see how price gets to an area of market geometry, for example. That's why I do like, and I know it's not everyone's cup of tea, a little bit of sort of loose Elliott wave analysis. We can call it, let's call it pattern identification or whatever the case might be. Then just using market geometry on its own, in my opinion, is not enough. We quite often want to see confluence between multiple other tools. Let's say a fib extension level lining up with a market geometry level, or in our case, also we have the our levels to lock that quite often, they do line up with, let's say we have a strong move upwards or above a upper, let's call this case a channel line. If we get a retracement and we have, let's say, a fib retracement level, or in our case, levels to lock or whatever you want to personally be using, lining up at an area of market geometry, then you're most likely either going to see support or resistance step in. Now, whether that's going to be temporary or strong support and resistance, obviously we'll never know that. So it's also very important that you don't just go and trade those levels. You want to see some sort of reaction from them. You want to potentially look for reversal candlestick patterns. So something else additionally to confirm those areas of market geometry, if that makes sense. I do think if you go and do an internet search on, let's say, pitchforks, I've been working with pitchforks for a very long time, as Nathan will tell you. Even got some of my own techniques that I love using. But the main thing to take away is try and get confluences between multiple other tools, not just drawing tools, and wait for reactions from those areas, if that makes sense, rather than just, trading from them. You want to see support and resistance being confirmed by price itself in many cases. If you want to use indicators and stuff as well, then I quite often like to see momentum divergence on a smaller time frame as price, let's say, pulls into an area that you think might as support or resistance, depending what direction you're trading. And just additional filter to, see, is the market getting weaker at that area? Is the fib level lining up with that market geometry? Whatever the case might be. So very important stake that away with you maybe today is confluence is very, very important.
Sure. Excellent. Well, thank you so much, Richard. And if you have any follow-up to that For a Reason, please let us know there in the chat. But I see For a Reason also does have a request for a tool spotlight. So, Richard, I was going to ask you, I know we have hundreds of tools. A lot of them are on your radar. A lot of them you've created content for. Is the dynamic SR zones indicator, is that currently something in your wheelhouse?
I can make it in my wheelhouse.
Sure. I've actually got it pulled up on our storefront here. Support and resistance levels, real time, create zones. I think it's something you could definitely,
Is that the free tool that you're using, Reason, or something that you actually purchased? Because I know there's a free version, and there's also, I think, one of our standalone indicators uses dynamic support and resistance to calculate, the zones that it marks out. But I'll be more than happy to help you out with that. I can do that on the next product spotlight. No problem whatsoever. Yeah.
Awesome. Well, you heard it here first, folks. For a Reason, your request, dynamic SR zones, support and resistance zones, will be our next featured tool spotlight. So we will make room for that yet this week. The only note I do have to pass along is that I will be traveling and officiating a wedding for some family this weekend. So I likely will not be here for Thursday's session, so it may be in our best interest to go ahead and bump that to next week. If that's okay with you guys and gals, just to ensure we're all here, and I'll be off the road at that point. Awesome.
Yeah, let's see how your things go, and then I think Wednesday's update will set a date just
Excellent.
so that you can go do your thing as well.
Awesome. So we'll get that figured out.
Cool.
We'll definitely lock in a date yet this week. It is looking like next week. We're planning for dynamic support resistant zones indicator tool spotlight. Another note I'll quickly pass along, as mentioned, we do our best to keep live events on your radar from the Ninjacators calendar. Our good friend Craig Hill, many of you know him, are already familiar with him, have spent some time with him. He comes in basically every other week to give us updates on his Robot Lab portfolio and then to share an invite or a link to join a Robot Lab masterclass. The masterclass this week is tomorrow. So our buddy Craig will not have the chance to come in and get those updates to you on Wednesday as we typically like to do. So one thing I was going to do really quickly while we have us all here is just put that, share that link with you now. We do have a Robot Lab event tomorrow. So I know some of our guys and gals here are already Robot Lab owners. But if you're curious, if you want to learn more, our founder, the architect of the Robot Lab software, Christian Hoffman, will be in charge of that session. Craig will be on deck. There will be plenty of room for Q&A, and that takes place right after market close tomorrow.
Yep.
Awesome. Well, it doesn't look like we have any more questions coming through. So we'll probably go ahead and wrap up for today's session. And as mentioned, we'll be back on Wednesday at noon Eastern. So really hope to see a lot of our new faces here. And as mentioned, tool spotlight on deck for next week. But if you have any follow-up questions, anything comes up that maybe you forgot, or something in this session grabs your attention later, you can always head over to our website and fill out a contact form to reach out to our support, alternatively support@ninjacators.com. And there is also a phone number plastered all over the website, so there's no shortage of ways to get in touch if you have any feedback about these sessions, or if there's anything you need assistance with in general with your Ninjacators tools, your products. We are, of course, always happy to help you with that. But that said, it looks like we'll go ahead and bring today's session to a close. So, Richard, I will pivot back to you very quickly for any sort of parting wisdom, or perhaps a very succinct recap on what we covered today and what we're looking forward to on Wednesday.
Don't really have too much parting wisdom, to be honest. Like I said, on the indices, still bullish, but like I said, potentially could get reversals. We've been seeing that, very sharp reversals, V-shaped bottoms, inverted V-shapes to the top, and you get these fast reactions to the downside. So just looking at the pattern on the ES, bullish overall. I think it can go potentially higher. I can't say it will, but that's the expectation. Obviously, that's why we do these sessions. But just potentially running into resistance soon. So if we do get a retracement on any one of these markets, or the indices that is, then obviously we'll try to highlight potential areas where support might step in again using market geometry, pattern analysis, or whatever the case might be. So and it's a relatively quiet week on the economic calendar. So we'll recap everything again on Wednesday and see where the markets are at.
Perfect. Awesome. Well, thank you again, Richard, so much for the valuable insights here today and for your time. And then to all of the audience that's joined us, whether you're here in Zoom or if you're over on YouTube in the simulcast, thank you so much for your time. We always enjoy our time with you here in these sessions. One final reminder to the YouTube crowd, if you do want to join us directly within Zoom here in the VIP section, there is a link beneath the video in the description where you can sign up and get reminders every time we go live. So we'd love to have you here if that's something you're interested in. Beyond that, just have a great rest of your week. In the meantime, we will be back on deck Wednesday at noon Eastern time with updates for the rest of the week. We look forward to seeing you there. So thank you again, everybody. We'll see you soon, and goodbye for now.
Awesome, everyone. See you on Wednesday. Cheers. Goodbye.
Jackie, I see your note. We'll have a dad joke lined up for the next one. My guarantee. Yeah. Awesome. Thanks, guys. We'll see you soon. Bye-bye.
Bye-bye.